Welcome to today's webcast, Learn to Trade Like the Professionals, Part 2, Live Market Trading. Now, just a bit of quick upkeep. You should see a little question and answer box somewhere on your screen that allow you to type in any questions or comments you have. We always like to have our webcast be fairly interactive. We like to hear what people's thoughts are on the stocks that we're looking at. If you don't understand something, please ask us to clarify. And we can always, do that after the session as well. I was going to say this is the second part. Hopefully, you did watch the first part, which was I ran, I think, last Thursday night, around about 7 o'clock. If you weren't able to catch that, a recording should have been sent to you. If you still haven't watched it, please go back and do so. It'll actually make this session make a lot more sense if you're a beginner. So during the first session, I ran through kind of how we analyze the market and how we look at stocks. And this section is about basically applying it. We're going to go pretty heavy into our analysis. Some of it's probably going to go over your head if you're new. If you're experienced, then a lot of it will be familiar to you. It's just, if I can, I might just start the session. But if you do have any questions, please type them in. So again, you might wonder who we are. We're Trader Circle and Emerald Financial. Trader Circle's been around for about 15 years, and our goal really is to support traders. So we're traders ourselves. We sit on a trading desk, and that does remind me, if you do hear a lot of background noise, it is obviously the middle of the market day, and despite Tim and I not being on the desk at the moment, obviously there's still plenty of activity, so there might be some background noise. So Trader Circle, as I just stated, is a trading company, but our goal is to really try and support you as a trader. Now, if you're not, a trader yourself, and it's something that you want to get into doing, we do provide education. I'm going to touch on that at the end of this webcast, but we don't really want to trade for you. So it's not a circumstance where you can just give us money and we'll do everything for you. We don't actually think that works from a trader's perspective. From an investment perspective, that's a bit of another story. But from a trader's perspective, we think the best trader for you is yourself. But unfortunately, not many of you, or not many people, are proficient and aren't doing it correctly. So what we want to do is we want to be able to educate you and empower you to be able to do this yourself. And then you can use us as a kind of backup. You can bounce your ideas off us. You can ask us questions. We can give you strategy ideas. We can help you price things up. We can execute orders for you and basically support you on your journey as a trader, essentially. So Trader Circle does run education as well as execution. Now, Emerald Financial is the other side of the business. It's actually more focused towards investment. I don't want to really get stuck into that today because it's not really the focus, but we do help people not just from a trading perspective, but also a portfolio longer term perspective as well. So today, what we're going to do is I'm going to give a quick market view. I'm going to try and keep it fairly simple. Tim's going to jump on and start looking for some new trades. Now, during the last session, the participants wrote in some stocks that you wanted us to look at, and Tim has gone away and looked at those stocks to formulate a view, and he'll be sharing that with you during that part. Tim's going to run through a recent trade example, kind of to showcase how we trade and the type of strategies that we employ during specific types of market conditions. And then I'm going to come back on and I'm going to run through some of the core skills that you need in order to be a successful trader. It's something that I did cover I did somewhat cover during the last webcast, but I'm going to recap it and then talk a little bit about the education that we run. This session today, it's worth noting, is very similar to a session that we basically run almost every day, I would say. Every day that the market's open, that's for sure, unless one of us is sick or there's a public holiday. Every day that the market's open from 12 to 1, one of the advisors runs a webcast where we actually go through the market and we look for trades, right? If you're a client of ours, you can jump on that, as you're probably well aware if you are, and you can sit there and contribute any ideas that you might have about potential trades that you're looking at or trades that you're in that you want some advice on from the group. And basically, we just go through the market and look for trades. Tim, who you're going to hear from, he does his on a Tuesday. I do mine on a Wednesday, where I actually cover a bit of options education as well for the second half, and the other advisors get their own webcasts during the week as well. So I think what we're trying to do today is, as much as give you some trade ideas and kind of show you the opportunities that exist in the market at the moment, I think it's also to kind of show to you the type of thing that we do every day, albeit maybe in a bit more of a rigorous sense, and it would only typically be one of us. Now, you've heard me mention our names a bit. My name's Karo. If you haven't heard from me before, then this must be one of your first webcasts. I'm an advisor, but I'm also the head trainer. So one thing that's really unique about our business when it comes to education is that if you ever come through one of our workshops, you get your own personal trainer. And part of my job is overseeing that and training people. I've got about 5 years experience doing that and about 8 years of experience looking at the market. Tim is the head of the trading desk. So basically, we've got a bunch of advisors that sit on the trading desk, including myself, and Tim manages that desk as well as a few other key areas of the business. Tim's been with the business for about 8 years, I would say, as well, maybe a bit longer. It's hard to know, 9 years maybe. He started off as a client who actually came along, did some education. He was onboarded as a trainer. And then worked his way up to becoming the head of the trading desk when one of the co-founders basically semi-retired. So I would say a fairly decent amount of knowledge between the two of us, but you're certainly in good hands with Tim as he goes through the market, looks for some trades and give you some trading ideas as well. Before I kind of get into the guts of it, I do want to say that any advice contained in this presentation is general only, so it's not tailored to your personal circumstances, and you therefore need to decide for yourself as to whether it's appropriate to you. Now, I said I wanted to start off with a bit of a market view. I hope that's okay with you guys. I think that's generally pretty important to understand, what's going on in the market. Sorry, it looks like we've just been kicked out. Give me one moment. The old password change. I panicked for a second then. All right. So this is by the way, this is the trading software that we use for charting and what our clients use for charting and execution. So in the trading tab, and I don't want to bring up the trading tab because for obvious reasons, but if you had this software, you'd be able to see your portfolio and all your trades and everything like that in it. So this is the software that we recommend to our clients. We don't own it, but we think it's very good for its price, and it can link to your trading account with us as well. Now, what we're seeing here is a chart of the XGO. Now, another common name for the XGO is the ASX 200. So if you think about the S&P 500 in America, it's somewhat similar. The ASX 200 is the top 200 stocks on our market, weighted by market capitalization. Okay. So when someone says to you, oh, I think the market's going up, or I think the market's going down, or have you seen the market today? For Australia, they're talking about the XGO, or they should be talking about the XGO. Right? If they talk about it for America, chances are they're talking about the S&P 500, right? Because the idea of all these stocks put together into an individual index that kind of tracks how everything's going in general. Do you know what I mean? And there's a whole bunch of other indexes out there. There's the Dow Jones, which is just a random number of 30 stocks. You've got the NASDAQ, which focuses on tech stocks. These are all Americans. In Australia, though, we've mainly just got the ASX. We technically have one other, but it's really not even worth mentioning. So when Tim and I want to look at the market and we go, okay, well, what's the market doing, right? Do we expect things to generally grow, or do we expect things to generally fall? What do we think is going to happen in the short term? This is the chart that we look at in order to apply our technical analysis. And again, if you attended our session last week, you'll remember that technical analysis is the idea of looking at charts, drawing lines, and analyzing indicators in order to formulate a short-term view of the market. And we typically believe that technical analysis is much better for shorter-term styles of trading, albeit you definitely want to consider fundamentals, which we're not going to go too heavily in today, I don't think. Whereas fundamentals should really be the backbone of your longer-term investing, right? You're looking at the health of the company over the long term, and that's when you would rely more heavily on fundamental analysis. So because I'm going to give you a short-term view today, I am going to rely on technicals a lot more, right? Now with the XGO, it's not a fundamental, it's not a company, is it, right? The XGO is an index made of the top 200 stocks. So when you want to look at the fundamentals of the XGO, it's a little bit difficult because you're not looking at the balance sheet of a company, right? Part of fundamental analysis of the XGO could be considered to perhaps go and read the news, something as simple as that. So you would open up Bloomberg or the Australian Financial Review and go read what's going on locally, but also maybe even arguably more importantly, what's going on in the US, right? But I don't really want to get bogged down there. Instead, I do want to apply what we learned last lesson. Now my chart or Tim's chart, I should say we're using Tim's software. His layout does look a little bit messy, right? Let's be honest. If you're someone who's used to looking at line charts, right? Tim might be annoyed with me right now because I'm deleting all his lines, but I'll put most of them back. If you're someone who's just looking at a line, used to looking at a line chart, then what you're looking at here is probably, kind of crazy, right? First of all, this is a bar chart. So each bar represents 1 day of trading. Okay, so it doesn't include the weekends, obviously, because the market's not open. But 1 bar represents 1 day of trading. Just to refresh your memory, the opening price of the lines on the left-hand side, the closing price or the current share price is the little line bar on the right. And the long vertical bar is every single price the index is traded at during that day. Now, we could change this to a weekly chart if we wanted to, right? And every single bar would represent 1 week, right? And sometimes Tim and I like to look at that, or the advisors in here as well, like to look at this type of chart to get a bit more of a longer term view. But as shorter term traders who put out recommendations to our clients, shorter term styles of trading, we mainly focus on daily charts and even sometimes intraday charts as well. The other thing that you're seeing on the chart are 2 types of indicators. You've got this squiggly line here, for lack of a better term, that you can see borders the bar chart. Those are called the Bollinger Bands. They're something that we like to use with specific settings. I don't want to get stuck into really too much what they do. And you've also got the stochastics down here, right? And these are, what you call technical indicators. They're mathematical formulas that interpret data and then display it as a graph, right? And they just help kind of confirm what our thinking is, right? It's not the be all and end all. In fact, to be honest with you, we don't, one of the rookie mistakes that I brought up last time was the fact that as a beginner, because these graphs seem kind of fancy, they're used as a bit of a tool to analyze the market with. Instead, what you want to actually do is you want to start your analysis with your trend lines and your counter trend lines, your support and resistance levels. Okay, so that's what we're going to do. There's no real, I wouldn't say there's technically a right way of doing something. It's a lot of this is a bit artistic in some ways. You're trying to draw lines that make sense. You're creating a bit of a rule in this regard. What you're suggesting is that every time the XGO comes back to this line, it bounces. And I would say that there's plenty of evidence for that. And I would say that rule has been proven correct 100% of the time so far. Right? So it started down here, it got to this point here, maybe even here as well, bounced and bounced again and bounced. Recently there, I'll zoom in a bit, maybe that'll help. Recently there it bounced, and recently there it bounced as well. So, because we have this trend line, if the stock or the XGO, I should say, returns to the trend line in the future, then there's a fair enough impression that it's going to bounce again, right? And that helps us pick direction. It's not the be all and end all. We don't trade based on that alone, I should say, but it's certainly part of the picture, isn't it? Certainly part of the picture, or a piece of the puzzle. Now, after we've drawn our trends in, what we typically want to do is try and look for a few counter trends. I might draw in something like this, right? Now, this is historical. This is no longer that relevant, but it kind of does highlight to me as the trader, okay, well, from a medium-term perspective, it certainly broke out of this pennant, right? And when things break out of pennants, break resistances, technically they can continue to move on for a bit. And that word pennant I should probably describe, if I'll just refresh your memory, is a type of triangle pattern. Following that, what we want to try and do is draw in support and resistance levels. I think it's always good to draw in key levels of support and resistance. Those are levels that have been touched several times, right? And they're everywhere on the market. And you can draw them in if you want to, but your page will start to look very, very, very cluttered if you do. So I try to draw in the ones that seem to be more relevant to our trading right now, right? Me drawing a support level in down here is correct and it's fine, but it technically isn't really going to help us make decisions right now for shorter term styles of trading. Okay. Now, maybe you could find a reason why you do need it there, and that's absolutely fine. But for the most part, yeah, you only want to draw in things that you think are relevant. So right now, what we're seeing is definitely that we've got a bit of a consolidation there at the top of the range. So the market bounced from the trend line, quite obviously, had a really stellar run, led by a charge in the US, pretty stellar run. A breakthrough of this previous what I call a post-pandemic high, right? So after the pandemic fall, like the big crash, that was the highest we decided that we traded at for a good while, right? And then it did break through. Now, after creating the post-pandemic high, creating a new one, it's fairly standard for our market to do exactly that, which is consolidate. Okay. Where to from here? I think Tim will agree, and most people do agree. Broadly speaking, we're bullish the market. It's kind of hard not to be. In the medium term, it wouldn't be unrealistic. It would probably, in the medium term, it's certainly feasible for a pullback. But because we're not seeing the signs of that just yet, we're not trading that. In fact, all signs point to a continued bull market for now, and that's exactly what we're going to trade. So if you wanted my market view, it would be over the next, at least towards the end of the month, we should remain bullish. Watch out for May. It typically is a bearish month, especially after a bit of a run. And that might be the excuse the market looks for in order to sell off a bit and to have a retracement or a correction, okay? And mind you, that is healthy for the market. The market can't just keep going up, right? It does need pullbacks in order to create that healthy trend, okay? But for now, it's hard not to be bullish. And I think most people will agree with me there. So yes, not a big shock. What I might do now is I think I've taken a little bit too much time from Tim. I'm going to bring him on now to let him talk about some of the stocks that you guys posted in. And he'll give you a trade example of what we like to, of how we like to trade, some of those more tougher market conditions. All right.
Perfect. Thank you very much for that, Karo. So look, the goal for me today is just to show you a little bit about how we go about picking stocks and doing a bit of technical analysis. Obviously, I bring in a little bit of fundamental as well when I'm trading. I want to try and keep it simple, though. If I go through everything that I look at, I'm just going to blow your brains in this very short period of time that we've got today to present. So, look, I'm just going to try and run through some of these technical concepts. I've got a bunch of stocks here that you guys have requested for me to go through. I'll get through as many of those as I can over the next sort of 25 minutes. And we'll go from there. Don't hesitate, please, to ask some questions as we go along, as I'll keep an eye on that Q&A box. So definitely throw some questions in if you've got any. What I'll do is I'll start off with the miners, as everybody's asked for all three of our major miners, Rio, Fortescue, and BHP. So I'll start there. This is one of my favorite areas at the moment, at least for the medium to short term, purely in the fact that there's just so much value in these stocks right now. So I'll just clear off some of these lines, get rid of some of this noise. The first thing I always do when I'm looking at a stock is I look for what the trend is. Okay, so the very, very first thing that I do, and if I scroll right out here, you can see around 2016 here that we've started a bullish trend. Okay, We broke that bullish trend very temporarily on that COVID pullback early last year, but now we're back on an uptrend again. And how do I know it's a trend? Well, your higher peaks and higher troughs, higher peaks, higher troughs, right? That's what establishes the trend. So what's most relevant, right? Karo just said it perfectly. What is most relevant? That's what we want to be drawing in. Well, it's quite difficult to draw a nice uptrend through here, as you know, trying to find those touch points that we're after. It's quite kind of a hard line to draw, but you can see, guys, you know, one way or the other, there's an uptrend in play here on the longer term. It's higher peaks, higher troughs. There's no way of debating that. In the short term, though, we've had a bit of a pause up here. Okay, so we had that higher peak here, and then we've pulled back. So we haven't really gained much since early this year, really. Okay, so what I'd be drawing in now is, okay, well, what's relevant? Well, we can see there's a huge amount of relevance around 44, isn't there? You know, we came up, tested that as resistance. It's a thereabouts, right? This is not technical analysis, isn't scientific, right? It really is a bit of an art form. It's a thereabouts approach. We know if it gets back down around this 44 level, there's a high chance of buying coming back in, unless something fundamentally has changed. Okay, so we get a feel for whether something's changed or not by behavior of the stock. Okay, we get a feel for the change of sentiment depending on the behavior and the patterns that we're seeing. All right, so we can see here that massive, strong push up, the last push up we had ended, right? That was a really strong trend, pushed us all the way up to 50, and that has ended. It doesn't mean we're going into a downtrend, though. What that means is that that particular uptrend has ended. So we're a little bit in limbo, aren't we? Right? We had that big pullback here, came down to find support around 43, we've bounced, and now we're coming back up to test that next key level of resistance at 47. So the way I'll be looking at this right now, okay, is drawing a little bit of a short-term uptrend like this, going, all right, as long as that uptrend line holds, I'm happy to continue going long in this stock. We've hit the first reflection level at 47, okay? So I want to see a break of that before I go long again if I'm going to do a new trade. So I won't be going long today. For me to go long or do a bullish strategy is what I mean by saying going long. I want to break at that 47.17 resistance level. Okay, if I get a break of that and the right signals, I will look to go long. Now, I feel there's a high chance of that breakout happening. Okay, don't know the time frame. That's what we use technical analysis for, is for timing. Fundamentally, though, I think the miners are very, very cheap. Okay, so if you know what a PE ratio is, price to earnings ratio, BHP is expected to be at about 11.4 PE come August reporting. Right, so that's a forward PE. That's a projected PE. If they report well and come in at that level, an 11 PE on a miner is very, very cheap, guys. Okay, I've seen BHP trade at a 20 or 30 PE before. So look, at the end of the day, it is on the cheap side. Okay. All right. So look, at this stage, BHP is not expensive up here, even though, you know, this is where the whole buy low, sell high thing could be wrong sometimes. Because for me, at a PE of 11, if they can continue to maintain current earnings, nothing's going to hurt their earnings. Well, you are buying low here, guys. You're buying low at $44, right? You're buying low at $47, as long as they can maintain the current earnings. So that's a little bit of fundamental jargon thrown in there. If you understand that, well and good. If you don't, you don't. The other thing I like to look at, and I do reflect on every now and again, is I might flick out to like a weekly chart, which means every single one of these bars on the chart now represent 1 week. Now, if I go back to the GFC, well, not including dividends, all right, because obviously the charts don't include, you know, dividends and that sort of thing. Well, if I bought BHP back in 2008, well, I haven't gained much other than dividends, right? So this is the thing, guys, right? BHP is not, you know, it was extremely cheap back here. It was extremely cheap back here at $24. And for me, it's still cheap up here. Now, you know, there's a few things happening in the mining area you need to think about, right? Copper, which BHP does a lot of, is sitting at yearly highs, okay? Sitting at highs that we haven't seen for a long time. Your iron ore sitting at incredible highs, okay? I'm still in disbelief on how high iron ore prices are. Right? Everyone was expecting iron ore to crash back below $100 US by now. We're still seeing 175 US dollars. So iron ore is at incredible levels. It is expected to pull back because this is crazy levels for iron ore, and it shouldn't be up here. It's not viable for a lot of steel production and things for iron ore to stay up here forever. So it will come back eventually, right? But nonetheless, even if iron ore stays above 120 or between 100 to 120 for a while, these miners are extremely profitable, especially Rio, Fortescue, BHP, extremely profitable in this space. Then you've got oil, which was expected to be a lot lower around all these COVID shutdowns and everything. And oil sitting, crude oil sitting around $60 US, surprisingly, through all of this craziness with COVID, right? So BHP does oil, it does copper, it does iron ore as their main commodities that they mine. So all in all, guys, I have to be bullish in this space for now. Something might change between now and the end of the year, right? And that's what you're always going to keep on is the iron ore price, right? That's the big thing with these miners. But nonetheless, you've got everything going their way right this moment, okay? And with more infrastructure spending coming from the US, one would expect this space to perform well for a little while yet. So look, that's BHP. Let's get across to Fortescue. Fortescue for me is quite exciting down here. We've come back down. We've hit the trend line, okay? So you can see mammoth uptrend, guys. Extremely strong performer, both from a share price growth point of view over the past, year and a half, but also from a dividend point of view, right? Now, look, you can draw this line however you please, but you can see we've come back down and we've formed a trough here, which has confirmed for me that we're going to maintain the trend. The other thing I like to look at on pullbacks in trends is that it holds a previous resistance level of support. That's a clear sign that the trend is still in play. And what I do like about Fortescue right now is you can see that in the short term here, we've broken the counter trend movement, and then we're starting to form higher peaks and higher troughs, okay? Very early, okay? Very early. There's another pattern here, and some of you might know that pattern. I'm not sure. It depends on the experience level in technical analysis. It's called an inverse head and shoulders pattern. And that pattern is a clear signal of the downtrend here reversing back into an uptrend again. So early signs of this, a break of 21, this pattern is suggesting Fortescue's going back to 23. We've got our first bullish sign here for a little while, okay? Great reversal, bullish signal. I actually think there's a high chance we're going through 21 this time. We tried last time, we failed. We're going to come back down. That's normal movements in the trend. I think there's a very, very high chance we'll get a break here. Very high. Okay, so Fortescue, I'm quite excited about, guys. I'm a buy at these levels. I would be happy to do a bullish trade at these levels. It's just about picking the right strategy, and we'll talk about that after I cover some of these stocks off. I want to show you a couple of strategies that we've been using. One that we've been using through the sideways market. I'll talk to that a little bit more when I go back to the XJO. But also what you could do with a stock that you think is going to move in a particular direction. Okay. All right. So look, that's Fortescue. Let's quickly cover Rio. Rio, I've got a very similar view on to Fortescue here. I do believe it's breaking today. We're already long Rio as a recommendation out to our clients. We did what we call a bull call spread. For some of you that know options might know that strategy. If you don't, that's okay. But we did do a bullish trade back here, and we're starting to come into some pretty decent profits right now. We're actually letting the profits run. Okay. So at this stage, we haven't suggested a close yet. We will be looking to close hopefully the next few sessions, especially if BHP jumps just a little bit further up. Sometimes it's important to let some profits run, okay, guys, if you've got that strong uptrend. And in this case, that is a fairly strong short-term uptrend. Happy to trade that trend till it ends, guys, right? That's the goal here. So look, to answer your questions, guys, Rio Fortescue is probably my favorite two at the moment. They are running at a much lower forward PE than BHP is. So loving them. BHP is probably closer to their highs, where Fortescue and Rio have got a little bit of catch up to do. Okay, I feel they're a little bit cheaper than BHP at these levels. Therefore, if I was going to play one of the miners, I'd be back playing Rio and Fortescue. Okay, and I do switch between these three stocks when I want to trade an iron ore miner. Okay. All right. So that's enough there about the miners. You know, I talk about the miners every single trade group I do. I love them at these levels. I think they're super cheap. Obviously, there's a few things of uncertainty to think about around China. And obviously, iron ore is not going to stay up here forever. But even an iron ore price that averages above around 120, they're extremely profitable businesses, guys. Extremely profitable. I'm surprised they're not getting more attention than what they've had over the last 3 months. Okay, so let's get across some of the banks. I've had a request to look at ANZ. ANZ has had a phenomenal rebound since the whole COVID pullback, but it hasn't rebounded back to pre-Royal Commission levels. Okay, so we had the Banking Royal Commission back through here. If I go back far enough, there's a few other fundamentals that played out that pulled the banks back. We haven't recovered back to those levels yet. But I think there's quite a high chance that could happen over the next 12 months or so, as long as central banks remain extremely dovish and as long as central banks maintain the steep yield curve. And some of you might know what that is, some of you might not. But basically, we're in much favorable position for the banks from a borrowing point of view. Okay, the way the banks borrow and they make money out of borrowing and lending to you, that those conditions are much more favorable right now compared to pre-COVID. Okay, so it makes sense for me that these banks could go much, much higher from here. What we need to keep an eye on fundamentally with the banks is how the housing market goes and how the Australian economy deals with the lack of keepers and seekers allowances. Okay, so that's been unwound over the last month, and we need to just keep an eye on those things. If all remains as it seems right now, I think ANZ's got much more on it. Okay, it's running at a forward PE of about 14. It's not cheap, nor is it expensive. I still think it's got plenty of scope to rise further. Technically, it's in a strong uptrend. No one can debate that. That uptrend is not a sustainable trend, right? It's very steep for me. So I look at the steepness of a trend, and that is very, very steep, guys. So you might, at some point, need to see that trend shallow out a little bit. And when I mean shallow out, you'll get a small correction. It'll go back on an uptrend again, but it'll go up on a much healthier trend, maybe on a steepness like that. Okay. Nonetheless, ANZ reports early May. Okay, and they tend to run into their report, so I will not be surprised to see it break this resistance. I wouldn't be trading it long right now until I saw a break of this resistance level that's testing right now. So I'll zoom right in again. You can see it's testing the resistance. It's having a good play with it. If it breaks through here, I'd be pretty keen to do a trade. If it falls back to trend, I'll be pretty keen to do a trade. The strategy I do if it drops down to trend will be different to the strategy I'll do if it breaks through resistance. And I'm not going to talk much more to that, but we have various strategies we apply depending on what we're seeing on the chart. Okay, we've got strategies using options. We've got strategies using mini warrants. I know Karo might have mentioned that a little bit last time. But option strategies give you a lot of flexibility in trading a market that's going sideways. Okay, it gives you a lot more control over your leverage. It gives you a lot more, I guess, flexibility of trading different market conditions, whether it's running up hard and quick, whether it's going sideways a bit or very slowly grinding higher. When everybody's sitting on the sidelines waiting for a move, guys, I'll put it to you this way: when the markets go sideways off what we've seen in the ANZ through here, and people are doing nothing because the market's not moving and they're just stuck in trades, we're still trading options, right? We're making money out of time decaying from options. So this is why we choose that product. And, you know, options are massive in the US. They're huge, right? They're not as big a marketplace in Australia, but they're still decent enough marketplace to get some good trades out of it, guys, right? So options, look, from a trading perspective, that should be on your list of things to learn as the years go on, right? I wouldn't learn at day one. They're a bit more complex than mini warrants. I'd say start with mini warrants, then look at options later. But look, ANZ, look, guys, I've got to be bullish from here. Medium term, I do believe it could easily get back up to like 31. Between now and the report, easily 30. Later this year, I suspect the banks will start returning their dividends back to pre-COVID levels. So I would still be very, very bullish this space, guys. But I'd say we're probably good 3/4 of the way through the move already, right? So we are entering in the top part of this move. It's not like they're really, really cheap like the miners are. The only way these guys are going to maintain this type of uptrend is if they really start showing some strong growth in their earnings every half year, right? So we'll know more, obviously, in a few weeks' time. But until then, I can only talk to what I see. But the trend's strong. That resistance breaks, go long, guys. Go long into the report. Try and close out before the report, okay? All right, so Suncorp was the other bank. Suncorp's sort of a bank, half insurer. So these guys get caught up in a lot more other stuff. So even though Suncorp hasn't come back to pre-COVID highs yet, it's running at the same price to earnings ratio, PE ratio, than ANZ. So even though on the chart this looks cheaper, it's actually not the case, right? Suncorp's running at the same price to earnings in the same sector, or very similar because they're a bank/insurer. And it's the insurance side that's probably holding them back a little bit. The trend short term is, or sort of medium term, is kind of up. I think they're stuck sideways now, guys. You've got peaks and troughs at the exact same levels for a period of time. I would call this a sideways moving stock until one of that either resistance or support breaks. So this is stuck sideways. This is where I'll be trading more my options sideways strategies on something like this. I wouldn't be buying this at this level. I think there's other uptrending stocks that are much better buy down here in Australia, I mean. So at this point in time, I wouldn't touch Suncorp unless I'm just trading short-term movements between those two banks. Okay, and there's various strategies we can do to trade that. But from a buying perspective, I think Suncorp's pretty boring, to be honest. There's better out there. All right, Newcrest. Honestly, don't know why Newcrest isn't already at $32, guys. I've been super bullish this over the last few months, waiting for a reaction out of the market, waiting for the market to catch up to what we're seeing in here. As a group, we've been very, very bullish Newcrest since it reported back here. And just, I think it just got caught up in a bit of ETF selling. But nonetheless, Newcrest does copper as well as gold, and not enough people talk about this, right? But from even a copper point of view, these guys should be at least $32, $33, right? So I'm extremely bullish Newcrest, looking for another opportunity to trade. You can see here the downward momentum, that short-term downward trend has now ended. We've now got higher peaks and higher troughs, which means this is looking a bit exciting. We were looking to potentially trade this yesterday, but we felt the move was too big and it needed to pull back. It's now pulled back and it's holding, see how it's holding previous levels as support today. This is now getting interesting, guys, okay? For me, I would be tempted to go long here. Most people will want to see another bullish sign before they jump in. It kind of feels like they're preempting getting in on a bearish day. So tomorrow, if this goes bullish again, guys, I'd be going long. I do believe the next target in the short term is easily back up at 28. I think in the medium to long term, it should be getting back up to these previous resistance levels at 30. And from a PE point of view, I believe, longer term, between now and all this reporting, it should be easily back up at 33, right? These guys are super cheap. The only way this won't play out, in my mind, is if gold keeps dumping lower. If gold holds where it is, Newcrest should be at $33, right? So that's where I'm at for Newcrest. The uptrend's in play. Everything's there. Just pick your entry signal, guys. Once we get it, always looking for confirmation. Always. There's one thing having a view. There's another thing trading that view, guys. Just because I'm bullish, it doesn't mean I'm trading it today. I'm bullish when I think. I do my trade when I think it's bouncing off the trend line or support. Okay. All right, so that's Newcrest. How much time have we got left? So I might do one more, guys, and I'll jump over and show you a few strategy ideas. Aristocrat, okay, ALL. This stock has, sorry, select that load. That's better. 2 seconds, guys. That's better. All right, so this stock has almost come back to pre-COVID levels up here. All right, we're testing at the moment. 2 seconds, guys. Sorry about that. Okay, so Aristocrat's almost back to pre-COVID levels. You can see here's a nice trend in play. high peaks, high troughs overall. It is looking a bit overbought from a technical standpoint. Just looking a bit bullish from a technical standpoint. Sorry, a bit overbought from a technical standpoint. This stock scores extremely well on our scorings. Okay, really good earnings growth. Everything lines up really, really well. It's just they're running at a 33 PE, so they're getting a little bit up there. For this stock to continue higher, everyone needs to buy into a growth story. So reporting is going to be extremely important for these guys. They're going to have to report extremely well in August for this stock to continue into all-time highs, okay? So for me, look, I'd be cautious around at the moment because it is testing the all-time high resistance, but the trend is up. So if it does break higher, I'd be happy to trade short-term, right? But from a buying point of view, I think you've kind of got to wait for reporting. Make sure that earnings growth is on the table. If that earnings growth is on the table, then it might continue into fresh blue skies. I like this company. I think it's well placed. But yeah, looking a little bit pricey up here, guys. They've got to give us a bit more confirmation, in my mind, that earnings are going to continue to increase, and they're going to increase like a growth stock would increase, right? All right, so that's where I'm at with AL. Looking a bit overdone short term. Happy to buy it off the bottom trend here. If it comes back to around 32, we'd be happy to have another crack at it back to 37 again. All right. We were trading it down here, by the way, and we've kind of left it alone as it's getting back up near these highs. But yeah, on a pullback to the longer term trend, be happy to play. Okay, so what I'm going to quickly do is I want to show you a strategy, guys. It's this is going to be something very new to you, right? To many of you that have never seen options before. This is a strategy we were trading whilst the market was going sideways. All right, so on XJO, we were trading the index, and Karo was going through the index before. But what you'll realize when you look at this index here is it actually, our market went sideways from roughly, end of November, early December, right the way through to just recently. So that's 79 trading days. It's 117 days where the market really didn't move much, right? So in those environments, guys, a lot of the stocks are also just going sideways, not doing a whole lot, right? Not all, right? But I'd say 80% of the stocks would be doing not much, okay? What it shows is not a lot of new money flowing into our market. It's just showing people are switching from one sector or one stock to another. But in these sideways environments, there's money to be made in options, right? These strategies can be applied, and most people don't know about this, right? It's just incredible. I don't understand why this isn't more widely spoken about. But this is a strategy we put out to our clients. It's called a short eyeing Condor. You can see we suggested this strategy on the 9th, okay, the 3rd there, and this strategy expired, okay, on the end of that month. So from the 9th to 25th of March, what are we're looking at about 2.5, 3 weeks there, right, in this trade to make 47% of your money off a 4 grand risk. Okay. Now, if I jump into the analysis of this trade, I can just dig down a little bit more. You can see this is what we send out to our clients, right? On the entry, we give them a chart. You see the red lines on the chart. I'll try and zoom in. That's not going to work. It's a bit blurry. Sorry, bear with me. I'll go back to the other chart and show you in a second. But basically, you can see here the market had already been going sideways for a period of time, had reached an uptrend line. So we decided to do this Condor because we thought it was going to stay between those two red bars. If I show you the matrix here, okay, the maximum we're risking was roughly 4 grand. And then as the stock was going sideways, you can see here that we could make up to $2,000 on this trade, right? All we had to do is keep it between those levels and we're making money. Right? So it's $180, $384, $684, and it kept going all the way up to 2 grand. All right. So look, how else can you do this? You can't do this with any other financial product, guys. Okay. So this is what we keep up our sleeve for sideways markets when, through the big moves in November, we weren't doing much of this. Actually, we didn't actually start doing a lot of this until we hit February and we realized that this market stuck sideways. Because a lot of stocks were moving up until February when we had the reporting season. After reporting season, a lot of things just went sideways, right? And these are the types of strategies that we've been trading for a couple of months now, all right? Just to sort of showcase, we do a lot of recommendations, guys, okay? That's what we do, right? That is our day job. Okay, we've got a NAB bull put that expired yesterday. No, sorry, it expires tonight. My apologies, 15th of April there. We just need to keep NAB above 2601. Okay, and we'll keep 16 credit on 110 contracts. That's a profit of around $1,500, by the way, guys. Okay, you know, by the time we take costs and things like that out of it. So options, we're doing a lot of this, especially in sideways markets. But in a directional market, we can also do options, but we also do a lot of mini warrants, right? In directional markets. So if I was going to suggest you a trade today on Fortescue, because I told you, like, Fortescue's bouncing, right? Yes, there's resistance close by, but we can set up a trade based on this resistance breaking on Fortescue, right? We've got a first bullish signal here. So I'll quickly show you this, and then I'll pass you back to Karo. But mini warrants are the other type of product we use to trade the market. And why don't we just buy stock? Well, the reason why we don't buy stock is it's a lot more capital intensive. And don't get me wrong, I buy stock, but I buy stock for long term, right? I buy stock in my portfolio. I don't buy stock to trade short term unless it's a very small cap stock that moves large, right? So why do I use mini warrants? I use it because I get leverage. It means I can put $2,000 on a trade and make the same amount as if I'm putting $20,000 on a trade. I buy it because it allows, I use mini warrants because it allows me to trade upward movement as well as downward movement. So I can go long or I can go short. Long means the share price, I want it to go up. Short means I want the share price to go down to make money. It's called shorting a stock. You would have heard this talked about around the whole GameStop saga, right? People shorting stock. Guess what? You can short stock as well using a mini warrant, okay? And there's nothing wrong with that, by the way, guys. There's absolutely nothing wrong with using a mini warrant to short a stock if you think the stock's going to go down. I wouldn't be doing it in a bullish market, though, right? Okay, so for me, Fortescue looks bullish. We want to set up a trade based on the fact that we think 21 would break. Otherwise, you wouldn't do this if you didn't think it was going to break. So let's quickly show you how this is done. This is our mini warrant calculator that we use. It's on our website. You can only get to this if you actually have membership. All right, so I want to pick one where I believe the stop is at a level where I'm comfortable. $19 is a bit close. I actually want to be at maybe the $18 stop level. All right, that's the first thing I want to look at. FMGKOI. All right, so let's go into my platform. FMG. KOI. What you're going to see here, guys, is this is a listed product. It's listed on the ASX or Chi-X market, so it is listed on a regulated exchange. You can trade it straight through your platform. You can see the price of this particular mini warrant is $5.03. So I get one-to-one movement on the share price, but instead of paying $21 or $20.76, I'm paying $5. So that's where the leverage comes into it. And to measure that leverage, we've got this little calculator down here. So you can get a feel for your risk and reward. And I strongly suggest if you're trading any type of derivative product, you've got to be using calculators like this. So you can make sound choices on your risk and your reward. I'm just going to zoom back out a little bit here. You can see the whole thing. All right. So the price of this mini warrant was sitting at what, 503. Okay, so now I can pick my risk amount. I'm happy to risk say $2.5 grand. And what that means, guys, if I change that to dollar profit or loss, if Fortescue goes back up to say 22.40, I'm going to make $800 off a $2.5 grand risk. That's pretty good, right? You know, if I think it's going to keep running though, I could easily, you know, get close to doubling my money if it gets back up to levels up here again. Okay. So what are you talking about here, guys, right? So if you get a movement of 20% on the share price, you're going to make 100% on your trade, right? That's what leverage is. Okay. But equally, if it drops down, you're going to lose as well. So what you're going to do is make sure you're comfortable with the risk. For me, I would be placing my stop, guess where, right? Down at $19. Because if it breaks 19, what's the trend? It's going to be a downtrend, lower peaks, lower troughs. It means I'm wrong. And that's okay to be wrong. Just realize you're wrong quickly. How you make money out of trading derivatives and trading leverage is by controlling your risks, okay? Admit you're wrong quickly, actual losing trades quickly, let your profitable trades run, okay? Don't make money out of getting every trade correct. You make money out of having much higher profitable trades and capping your losing trades quickly. That's how you make money. And that's how a lot of people don't make money out of the market and don't make money out of short-term trading, is they let their losses run because they can't handle taking a loss. And then they take their profits too quickly because they just don't want they want that profit, right? It becomes an addiction. So it's a lot of psychology here to be managed. But you can see the power of using leverage here, guys, and that's on a small risk of $2,500, right? And this is where it doesn't matter how small or big you are. You can do $1,000 trades if that's what makes you comfortable. You can do 10 grand mini warrant trades. I've got clients that do 30 grand mini warrant trades and 30 grand options trades. I've got clients that do $1,000 or $2,000 trades. It doesn't matter, right? This is a great thing about derivatives. What I say to you is start small. Start small, guys. You've got to get your psychology right before you're going to make money out of trading. You can learn technical analysis, you can learn all of this stuff, but if you don't control your psychology, if you don't follow a set of rules, if you don't be disciplined with this stuff, you can get yourself into trouble, all right? So just be wary of that. But I just want to show you the power of derivatives here, guys. With that power comes respect. You've got to respect it. You can make 80% out of the warrant by putting a 20%, getting a 20% movement. Fortescue, you can do a 20% movement in a month. You can do it in a couple of weeks, right? It's not unheard of for Fortescue. The great thing about mini warrants is you can sit on them as long as you want. There is no expiry. Only time these don't exist anymore is if it hits the stop or you sell out. Okay, if you've opened it, they cannot get rid of that strike. They can't get rid of that particular mini warrant until everybody's out of it or it hits the mini stop of $18.06. Okay, so you can sit in there as long as you like. There is a funding cost. I won't go too much into that. That's what our courses and all the rest of it is to learn that sort of stuff. All right, so look, I'm just seeing the time. I better hand you back to Karo. Look, I hope you learned a little bit there. I know I went through a lot of things quickly, okay? It's because, there's a lot to go through in a very short period of time. The idea of these webcasts is to really just demonstrate what you might not already know, okay? If you don't know what you don't know, and if we can demonstrate, okay, well, here's a path forward. This is how we do things. These are the products we use. This is the type of analysis we use. It gives you a path forward to start trading a little bit better and start trading a bit more disciplined and start putting, some analysis behind what you're doing. I know a lot of people out there that are just trading on the back of pub analysis, where they're just trading off the back of what their mates are telling them, or a bit of Facebook analysis and just trying to see what everybody's talking about, right? Well, that only works when it works. Where our system, our trading system, it's not perfect, but it gives you a way of analyzing the market on a consistent basis, where you're always going to find trades. You're always going to be finding opportunities between using mini warrants and options. There's always a way of trading this market. Doesn't matter what the condition is or what it's doing. It really just comes back to how well you can read the market and predict what the market's going to do next. Okay. And that's what technical analysis is all about as well, right? Picking direction. So Karo is going to cover this off now a little bit more. What do you need to know about the markets to be successful? So I'll hand you back over to Karo. Thanks for listening in. Have a good day.
All right. Thank you very much, Tim. Hopefully you guys really enjoyed that. Gives you a bit of an insight as to the type of service that we provide our clients. Basically, like I said, every day, Monday to Friday, when the market's open. It's a good little way to kind of find some trades, right? I mean, if you've got that kind of spare half hour, 45 minutes at lunch at 12 o'clock, you can always kind of log in. You can listen to it on your phone. You can obviously jump on a computer or a tablet, and then potentially have some of the work done for you in some ways, right? With a few trade ideas by the end of the session, which you can go on to place yourself if you've got the time, or you could call up and place a trade. You could be like, hey, Tim, I like that trade that you suggested during your webcast. Would you be able to price it up for me and get it in? And you could be, in the middle of doing something where you make that call or whatever. So you can see the advantages, why our clients like them, why we run them every day. If you want to be a part of that, something that you can look into as well. We don't, you can open up a trading account with us and just basically go and start straight away if you wanted to, and jump on some membership if you want. But we obviously don't recommend you doing trades that you don't understand. So with some of the stuff that Tim ran through today, I think I'd be safe assuming that there's a lot of people that don't really understand how those strategies work. And so we don't really recommend you just jump on membership, open up a trading account and do them, right? We do suggest that you do education first. Now, there's a couple of ways that you can approach education. I actually ran through this, I touched on this, I should say, last webcast on last Thursday, the first part. I touched on, one of the rookie mistakes is that people think they can become a successful trader by self-educating and then going and trading by themselves. I've actually never even heard of that working out. I've never seen it work out. I've never heard of it working out. You either want to get some proper education through, say, an education provider like us, or by the very least, you want to have like a mentor or someone that you can bounce ideas off, who can kind of check you before you place those trades. Both is ideal, obviously, but having neither of them almost certainly won't do you any good. Now, investing, again, different story, right? Let's say you decided to buy a stock, especially something like CBA, and then CBA, goes down 10%, 20%, 30%, 40%. Yeah, over 10 years, there's a fair chance that it recovers, right? And you're going to get paid a dividend. You're kind of good. So, albeit, it's not ideal, right? And that being educated is still important. It's far less risky than, say, the type of trading that we've run through today. So if you are interested in learning to trade, you do want to be able to try and generate an income stream. It's important that you go out there and get educated properly. And I do want to take a moment to run through some of the things that you do need to learn, right? Because we believe there's certain things that you need to focus on. I mentioned this again during our last webcast. If you jump onto our YouTube channel, you'll be able to find a 3-part webcast series that we ran. And that really goes into the main things that you need to learn in order to be a successful trader. But I will touch on them right now, just to give you an idea of the type of stuff that you need to learn. So again, I ran through this last session, but I do want to refresh your memory that there's 3 main areas that you need to focus on if you want to be a successful trader. And that comes down to picking direction, so the ability to speculate in the future direction of the stock, right? You probably want to have a few different strategies in your toolbox, or a few different tools in your toolbox, in order to be able to trade different market conditions. And you obviously need to manage your risk, because not every trade is going to be profitable, not every trade you're going to get right, and you want to be able to manage those trades effectively, as well as your capital. What really should bring all of those core concepts together is a set of trading rules. Okay, those trading rules can be fairly rigorous, they can be fairly loose. It's the fact that you should have them, really, that's the point. And even better if they're tried and tested, and you have the ability to change them over time to suit your needs, right? So trading rules should bring everything together. But those are the kind of the main things that you need to focus on. So if you're listening in right now and you go, okay, well, I want to learn to trade, but I don't know what I want to learn. What you're seeing on your screen right now broadly encompasses, the 3 main areas that you need to focus on. Okay. Now, what we do is we run an education course called Technical Trading for the Australian Market. I'm going to probably spend the next 5 minutes just going through what's involved in that. We'll cover any questions that you might have. I answered a bunch of them the last webcast, so but I'm happy to obviously go through that again. The idea of this course is to basically fast track your learning, right? If you try to go and teach yourself this type of stuff, it can actually cost a lot of money, because you're kind of learning through trial and error in some ways. And it can take a really long time as well. And time is money, if you wanted to look at it that way. This type of course is mainly suitable for beginners, right? We do recommend it to beginners. But if you're an experienced trader, almost in every course we run, we have an experienced trader in there, almost always. And that's because if we can teach you one or two things that actually improve what you're doing, then obviously in the long term, it becomes worthwhile, right? Especially if it means we're going to work with you because we're actually on the same page, right? The type of analysis that we do, you understand, etc. Now, the desired outcome is for you to be confident and efficient in your trading. And it's really built on mutual success, building relationships, right? That's what our business is really about. It's about supporting you as much as possible so that you can, by the end of it, become a successful trader. If we can help you, turn a profit in the market, if we can give you that support and that service, then you're likely to continue to remain being a client, and you're likely to continue to use our services. Now, the course begins with a 2-day face-to-face training session with Carlo Castellano. Some of you would have heard that name before. He's the co-founder of Trader Circle. He's been teaching and trading for over 20 years, 25 years, something like that. He's the one who taught myself. He taught Carlo. He was the head of the trading desk until basically he retired, right? So I should say he's semi-retired, basically. He still looks for trades. He trades from home, obviously, and he still runs the education for us, right? Now, we don't do huge, giant classes. We only take in a small group of people, up to 10. Considering what went on with COVID, live stream is available, okay? And we just do it in our boardroom. So the face-to-face session, the 2-day sessions are done in our boardroom. But if you don't want to travel to Melbourne, obviously we understand that. And you can do the live stream if you want to. Right. The good thing about a group of 10 is that we're able to focus on you as an individual as much as possible, and you can't fall asleep at the back of the room. You're fully accounted for. Now, obviously, the course is going to focus on those 3 main areas, right? Picking direction, strategy, and risk management. And what we're going to do is we're going to bring it together with Carlo's own trading rules. So you're going to be taught step by step exactly how a professional trader trades the market. You're going to use his exact trading rules. They still use to this day. And those trading rules have changed a little bit over time, obviously. And, we'll work on you to be able to develop those trading rules to perhaps suit you, your risk tolerance as an individual more further down the track. But we're going to give you a foundation that you're able to build upon. And it's a very solid foundation. The picking direction part will mainly focus on technical analysis, right? Because again, the goal here is to teach you how to trade the short term so that you can try and generate an income stream, right? Excuse me. And we're going to teach you in a very rigorous fashion how to pick the short-term direction of the market through technical analysis. In terms of trading your view, we're going to teach you how to trade mini warrants. Now, you can apply what we teach you to other instruments as well. So if you're trading foreign exchange or you're trading futures for whatever reason, or God forbid CFDs or something like that, or even simply stock, you're welcome to just continue to do that. But we will teach you how to trade mini warrants so that you can trade bullish and bearish markets or bullish and bearish stocks, right? You do have a choice of leverage, which will allow you to use less capital to turn more profit, right? But obviously, the other side of that is that you could lose more as well. We only ever do strategies where the risk is capped, mind you, whereas there's other strategies out there where they're not. But we want to be able to, but with the ability to trade bearish strategies as well as to have leverage, you're actually in a position where you have more trading opportunities, right? And as a trader who's trying to generate an income stream, that seems to make a lot of sense. Finally, we'll finish off with obviously risk management. Okay, goes without saying once again that you're not going to get every trade right. In fact, you will have a string of losses during your career as a trader, and you'll have more than one. The idea is to be able to implement stops effectively and preserve and manage your capital. Following the 2-day course, right? We don't, just put you in a room, teach you a bunch of stuff, then off you go. As I've kind of the drum that I've been really beating these webcasts is to really promote the idea that we're traders who want to support other traders. So you actually get 8 weeks of continued learning, right? You have access to our members area. There's training videos that cover everything that you've been taught during that 2-day session, so that you can revise and go over that material. There's daily webcasts, which I've harped on about during this session. We'll give you market updates 3 times a day. We'll give you trade recommendations. whole bunch of resources there to assist you, not only your learning, but also when you're ready to start trading with real money, to help you find trades and be a good trader as well. We'll give you all the technology that we use. So we'll give you the trading software, the calculators, all that type of stuff. And more importantly, and in my opinion, most importantly, you get your own personal trainer. So you can call them anytime you want. They're there to obviously answer all your questions, to make sure that everything that you're doing is correct, that you're learning at a good pace, and that you're hopefully on the right path to become a successful trader. So you can, and look, again, I do want to stress, you can call them as many times as you need. You can email them. The trainers here, including myself, we've been doing this for a long time. We have unprecedented amount of patience. There's no question that we haven't heard before. So you got to remember, it's within our best interest for you to become successful. The courses that we run aren't really profitable for us. They're actually, it's not something that we really make profit from. They're really just a stepping stone for you to become successful, for you to continue to use our services, for you to, to trade through us essentially. So that's really the goal here, is to take you from where you are now to fast track your learning, to help you become competent and successful. And if we can do that, then you're likely to remain a client and continue to use our services. During that 8-week period, I forgot to mention that we do run a paper trading competition. So we give you like a demo account kind of thing, and we want to simulate real trading. The winner after the 8-week period gets a prize, but really the idea is for you to simulate what the real world would be like, and so that you can actually apply and prove to yourself that the rules that we teach you work, you can give yourself a head start before you start trading with real money. Right, and get all those kinks worked out, get all those teething problems sorted. When you're ready to transition to live trading, nothing really changes. You still work with your trainer. They perhaps become your advisor, and they're there to give you trade ideas, to help you pick strategies, to help you price up strategies, to help you close and open trades if you need that as well. Now, if you'd like to come along to this course, it does come with a fee. The investment is a deposit of $995 plus one more payment of $995 a month later. We just do that so it can come out of cash flow, which means the total investment of the program is $1,990, right? Very reasonable considering everything that you're getting, the 2-day face-to-face training session in our boardroom. You get manuals, it's fully catered for as well. There's 2 months of online training. You get your own personal trainer, trade recommendations, access to all the software. There's so much value packed into that. Again, it's really there to help you as much as possible to get you to where you want to be. The next dates are the 1st and 2nd of May. We've got 9 people booked in. Usually it books out around about now. Right? They book out usually over a month in advance. Okay. After May, I'm not exactly sure when the date is, but we don't run them that often. We run them once every month and a half, maybe something like that. We want to be able to, again, focus on each student as much as possible, so we don't run them too frequently. Thanks very much for listening to what I had to say and what Tim had to say as well. I hope you really enjoyed it. I think the next session we'll maybe do something a bit more advanced if you want to kind of come along and watch that one. But again, thank you very much for everyone for jumping online. If you do want to watch the recording, it will be sent to you. And if you're interested in coming along and doing one of our workshops, the best person for you to speak to is my colleague, Jared. He's the head of the education department. He's our market advocate. He'll be able to put you in the right place. Might not necessarily be for this type of workshop. We do run other types of education as well. If you're not interested in kind of doing some more education because you're already experienced and you're comfortable, but you would like to have someone to have your back in the market, then you're welcome to open up a trading account with us, maybe jump on some membership and start trading with us basically. All right, guys, well, thank you very much for joining us. I got to get back to the markets about that time. If you'd like to have a chat to me about anything that we've talked about today, feel free to give me a call and speak to me directly if you'd like. Otherwise, good luck and happy trading.